So this is the supply zone, and in this video I'm going to show you how to actually profit from trading this supply zone by following 3 simple steps, and why by following these steps will increase your winning rate. Hi, my name is Ming Jong, and welcome to another episode of the market analysis for the S&P 500 E-minis futures for the session of 15th of December. So in this video, as usual, I'm going to share with you the market session from yesterday, and also a trade review happened in the 3 minutes time frame. So in this case, going to involve a trade that trading the supply zone and using these 3 simple steps. And going forward, I will also share with you my trading plan together with the important levels that I'm watching for the session later. Alright, so let's just get started now. So as usual, I would like to go to the higher time frame. So let's just start from the daily time frame, and let's just do a quick recap on what's happening for the past few trading sessions. We do have a pretty impressive supply coming in. So we have increasing of the supply level for the past 4 trading sessions. So that's the top that we're having at the S&P 500, and subsequently we see that these 2 following supply levels are relatively high. The good thing, or the bullish thing about these 2 trading sessions, are the demand tails. So the demand tails actually just a reflection of there's some buying happened during these 2 sessions, and you can see that the downside progress is actually limited as well. So it simply means that there's some buying in these 2 days. So yesterday I actually expect a rebound or a continuation to the upside, or a reversal up. But you can see that the reversal is short-lived. We see that there is a attempt to rally up. So as see by this rejection tail, so it just rally up and then get sell off and all the way close at the low right there, and that comes with even higher supply level. So that doesn't really look that bullish at all to me. So let me just get down to the hourly time frame, and let's see what else can we extract out from the hourly chart. So as we can see, pretty much these 4 trading sessions comes with a higher volume. And apart from that, definitely it's a lot more volatile right there, and we see some shortening of the downward progress or downward thrust, but it didn't really successfully reverse the uptrend. So we did have a gap up during the Asian session, and subsequently followed by an attempt to rally up. But just look at this. So this is the supply zone that I'm talking about, and it just kind of created an uptrust situation, temporary commit above this high of this supply zone, and followed by a reversal bar, and comes with a spike of the supply as well. So this is where the reaction started, and it comes with a relatively sharp sell-off. You can see that the movement is quick, and it comes with an increasing of the supply as well. Alright, so let me just get down to the trading time frame, the 3 minutes time frame, and let me show you how to actually trade the supply zone by following these 3 simple steps. And by following these 3 simple steps, you'll increase your winning rate, and I will going to explain to you in detail. But before I dive into the actual setup right there, as usual, let me give you a bit of the context of the trade. Okay, so here we are in this 3 minutes time frame, and we can see that just prior to the US opening at about 10:30 p.m. at my time zone, we see that during this global session, the non-regular trading hours, first of all, there's a gap up in the Tokyo time frame, Tokyo time zone, and subsequently we see a trading range form, and eventually we have a breakout happen, and that actually just kind of threaded to the higher ground, and eventually it just go to test the previous supply zone, which I think is more obvious in the hourly time frame. Let me quickly show you the hourly chart again. And by just saying the supply zone, what I actually mean is this is where the supply come in. So how do we actually define a supply zone? So let me give you a quick introduction of the supply zone. So basically, first of all, we just need to identify the supply zone, and that actually involves this kind of the big spread bearish bar, and we need to identify there is a spike of the supply level as well. So in this case, this bar here has a very big spread and also comes with this much of the supply. So compared to the past few trading sessions, it definitely has higher than the normal volume. So definitely this is a supply zone, and we can see that there are pretty much this type of bar or this type of bar, or even this bar right there is the supply zone. Alright, so now you know how to identify the supply zone in a quick way. Then let's just dive into the setup immediately. So the setup is pretty much based on relying on the supply zone, because the supply zone, as the name suggests, contain a lot of the supply. So whenever there's a supply, you can just view it as a typical resistance level. But in this case, the supply zone is a candle, so it's pretty much that it's testing the supply candle. So if you just pay attention to the highest point of the candle is roughly around 36.85 or 86. So pretty much is somewhere near to this non-RTH high as shown in this dotted line right there. So that is the resistance level, you can say, or I would say that's just the supply zone. And subsequently, the second steps, so the first step is to actually identify the supply zone. So when we identify the supply zone, then I just mark it the high point roughly around 36.86, and subsequently we just need to see how the price react. So we want to see the rejection if we want to short it, because like the resistance or any other levels, so supply zone is just a zone that consists a lot of the supply than normal, and just like the resistance, when the price approaches the resistance, it doesn't necessarily mean that they will have a reversal for sure. Even the price has a reaction, it could simply be a pullback. So a pullback under a bullish environment is just pretty much a good entry for the continuation of the uptrend. So second step is definitely we need to see how the price react to the level or the supply zone, and we want to see price rejection. So in this case, in the opening session of the US time zone, we see there is there's a breakout of the previous swing high level or the non-RTH level. And subsequently, we see that there's a shortening of the upward thrust. So what do I mean? So you can see that this is the thrust, the progress to the upside. And subsequently, you can see that the progress to the upside or the thrust is getting shorter. And this is a third push, is barely an up thrust itself or a false breakout. So you can see that the upward thrust is getting shorter and shorter. So it simply means that the momentum to the upside is fading. So this is the second step. Once we identify the supply zone, the second step is to actually identify how the price actually react from there. So we notice that the up momentum is fading and there's a shortening of the upward thrust, and we just want to see price rejection. So here is the price rejection, and if you just take a look at just purely maybe this localized trading range, then we just want to see some kind of the downswing. So this is the greatest downswing that we see out from maybe this or this. So definitely something is different. And the third thing, and I think in my opinion is the most important thing, and a lot of the trader always overlook this part, is to determine what is dominating, whether it's demand is dominating or supply is dominating. So despite that we see this kind of the downswing, definitely in terms of the price action, certainly this is bearish. We see a greatest downswing, but what about the volume? The supply is dominating or the demand is dominating, or the supply is not that obvious. So this is very important, because remember, we're still in an uptrend despite we're seeing this kind of the momentum is fading and with the downswing. So one way to think about that is just to think about traditional technical analysis, whether we see a low, higher low, or higher high. So this kind of thing. So we have a low. Now until this point, it's still a higher low. And we have a high, high, another high here. So nothing seems very bearish, at least to the point that we use a higher high, higher low to define an uptrend. So if we just base on this, could this be just a pullback, a simple pullback from this uptrend? And could this reverse up and continue to the upside? So that's why it's very important to identify which part, whether it's demand is dominating or supply is dominating, so that we can decide the bias. So here we go. We need to just identify the supply level. So in this case, the previous push like this, and also this push comes with pretty much a consistent volume or consistent demand. But look at this downswing right there. So we see that there's a pickup of the supply, and if you just compare it to this, especially this breakout bar right there, so supply is definitely picking up. So in this case, when we combine all this together, so first thing, there's a supply zone, or you can say that this is pretty much we hitting a resistance zone, and we see that there's a shortening of the upward thrust, suggesting that our momentum is fading. And we see this price rejection, the greatest down wave. So price is rejecting from the supply zone. And the third thing, definitely we see supply is dominating at the moment. So these are the three steps that actually prompt me to just open a short trade right there. So right after the close of this bar, and this bar actually acted as a confirmation bar as well, we see this kind of the breakdown with a increasing of the supply level. So right after the close of this bar, I just enter short and just trail my stop, and eventually I just exit my trade right at the close of this bar there. So there is actually some effort versus results based on the Wyckoff's law showed up as well. So if you just zoom in or just pay attention to this two bar alone, so this is a big bearish bar, big spread bar, and this is a relatively small bar, so even probably about 1/3 of this bar as well. But look at the volume right there. So despite the small volumes, the small spread, the volume show up there is pretty much similar to the previous bar. So I would say that with a lot of the effort to push a price down, the results is actually a very small spread bar. So suggested demand come in at this bar. So I just close it up right away. And another important factor for me definitely is also the time frame. So it's pretty much about 12 AM at my time zone. So it's kind of late, just want to exit. And it's just happened that this is a very nice exit for me. So after the close of this bar, I just exited trade, and you can see that subsequently it's kind of have a rally. So this is the rally because of this demand come in at this bar, the small spread bar. So I think the exit timing is perfect. So that is a trade that achieved probably around 1.3 reward to risk ratio just based on trading the supply zone. And talking about the supply zone, if we just think about this bar right there, so this is also a supply zone itself in the 3 minutes time frame. So we see that this rally, despite comes with quite significant amount of the demand, it just kind of tested this supply zone without pretty much overcome half of this bar. And if you just think of this as a resistance, it's kind of tested the resistance, and once it reversed, I think this can be another add-on to the short trade and write it down to the downside as well. So definitely quite a number of the trading opportunities to scale in and trade to ride the outtrend. So this is the trade review. Let me just quickly get down to the hourly time frame and let's talk about the current market condition. So far, we have seen that there is a sharp reaction from yesterday action. So that actually posted a bearish picture for me, because based on these two trading sessions, there's a demand tail show up despite with the high volume. Definitely there is some buying coming in on these 2 days, and we see the effect in the morning, but we see that the failure happened, failure for any upside follow through, and that's right at this supply zone in the hourly time frame. So that actually painted a bearish picture, and subsequently this is a relatively sharp sell-off, pretty much similar to the first reaction down, and comes with even higher supply level. So right now I'm actually waiting the price to probably approach this bar right there. That's also another supply zone itself. So this is a supply zone, and that's somewhere around 36.60. So that's the supply zone, and I just want to see how the price will react from this supply zone, whether there's some rejection showed up with some confirmation, then that could form a short entry for me. So definitely I will see that if it just fell right there, then there will be some more downside for the S&P 500. Obviously the first level will be I think that could be right there, the swing low, so 36.30 to 40, so that could form some kind of the support. But if that fail, then likely that it would just go back to test 35.90, which is this orange line right there. So you can see that that is the 35.85, so that is another support level. This is the end of the video. Hope you enjoyed it. So if you'd like to learn more on how to increase your winning rate, definitely check out the video that showed up on the screen right now, and do remember to subscribe to my YouTube channel and also to join my email list for free so that you get weekly stock watch list updates. Thanks for watching. I will talk to you soon.